We think about healthy risk-on environments are a combination of a few different factors. You want to see volume going up, but volume in isolation doesn't tell you if a market's healthy or not. You want to see open interest stable or growing, and we're seeing open interest growth across all three of our energy, ags, and metals asset classes. You want to see broad participation across all client segments, and every single client segment across our commodities portfolio, whether it's buy-side, retail, commercial end users, banks, indexers, prop firms, every one of those customers is in green right now. They're all growing. And then lastly, you want to see global participation. You want to see growth in the US, Europe, Asia, LATAM, Canada, everywhere. And on every one of those markers in commodities, they're all flashing green right now. So it's a risk-on environment, open interest additive, and I think we're seeing a lot of broad participation. So the uncertainty is breeding the need for risk management, and we're in the business of providing that to our customers to manage through increasingly uncertain times.
What is the current landscape for options trading at CME Group?
When you think about how customers are managing risk in the volatile environment of not just this quarter, this year, but the last couple of years, we've seen a broadening sophistication of end users and adding more options to their overall portfolio of risk management tools. That's been an area of growth for us. We've invested in different maturities of products, moving more to the short dated. We've rolled out smaller versions of our popular micro contracts on the option side. When you look at a lot of the non-linear risk market makers are facing and market takers are facing, options are a perfect tool for managing the non-linear risk that everyone's facing right now. So that's been an area of growth for us. You know, we are a futures exchange, but options are an increasingly large proportion of our business. About 20 to 25% of our volumes on any given day is in the form of options. And market conditions we're facing today, high volatility, great uncertainty, a risk-on environment, options are perfect tools to help customers manage risk.
What trends are you seeing in natural gas and crude options?
The energy market is going through a lot of change right now. We see structural change in terms of U.S. producing and exporting record amounts of WTI crude oil and natural gas. That means U.S. product is going out onto the global shores in Europe and Asia. And that's really expanded the adoption of particularly our Henry Hub natural gas futures and options and our WTI futures and options. When you look at our energy business last year, we set records in terms of volume and open interest. We're seeing that continue into 25 this year as well. We're seeing a couple of different trends. Number one, we're seeing record growth. We're up about 25-30% across energy this year. Within that, energy options are growing even faster, up about 40% year to date. It was a record year last year. Just last week, we set a single day record for nat gas options, over 600,000 contracts traded just in nat gas options. And I think that's a trend that we're seeing in terms of a risk-on environment. We're in the business of risk management and providing those tools to customers globally. And in a market with this great deal of uncertainty, WTI and natural gas is a core component of any input, pretty much anything manufactured globally. And that means customers are exposed to risk moves in those products, and they're using CME Group products to trade and manage that risk. So we're seeing buy side be a substantial growth driver in energy, both natural gas and WTI. We're also seeing non-US growth be a large component. Year to date, our European and Asian business is up 30%. Overall energy is up about 25%. So we're seeing outpacing growth outside the US. And it's exciting to see. We're excited to see customers that are availing themselves of the tools that we've built, whether analytics, options, capabilities, volatility indices, to help understand and manage risk. And they're doing that increasingly on CME Group products.
Are you seeing similar patterns in agricultural markets?
Commodities is really made up of those three components of energy, agricultural, and metals markets. And historically, we'd think about these three businesses being distinct and separate from one another. But in the world in which we operate now, those distinctions between asset classes are blurring. Customer bases between those asset classes are blurring as well. Directionally, we're seeing a lot of growth in agricultural markets, similar to what we're seeing in energy markets. And that's not a surprise when you think about energy traders that are increasingly trading into the renewable space, whether it's ethanol or whether it's renewable diesel, that crosses right over into corn and soybean oil. So we're seeing growth in our ag complex that actually is outpacing energy this year. Our ag business is up about 30%, and our options business is up about 35%. So I would say the trends directionally in ags are driven by an increasing percent of energy traders adding ag markets into their portfolio. Options adoption continues to grow, and similar to energy, we're seeing close to 40% growth in what we're seeing in our non-US business, most strongly out of Europe right now.
How is the metals market reacting to volatility?
Policy changes impacting metals, with trade policy changes impacting metals, how is the options market responding to volatility in assets like gold, copper, and other industrial metals?
Yeah, I would say when you look at what's driving a lot of the uncertainty right now, it is, as you just mentioned, some current administration policies around tariffs, uncertainty as to will they be applied, won't they be applied, if they are applied, to what magnitude, if so, on what timeline, and for how long. The market is unable to answer those questions, so it's turning to CME Group to manage that risk. Options are a great way to manage that risk as opposed to trying to pick a point and say, I will be long or I will be short. We're seeing more customers adopt metals options, both on the base metal side, where we're seeing significant growth in copper options, or on the precious metal side, where we're seeing record levels of not just institutional use of our main gold contract, but we're doing close to 150,000 contracts a day in our micro gold contracts. That's not just a retail play. That's small institutional players using those contracts to manage around discrete event risk or announcement risk coming out of the administration, which is almost daily these days. So it's impacting the market, and there's uncertainty as to timeline and impact and magnitude of impact. So we're seeing the demand for risk management tools increasingly expressed in options on our COMEX products on the CME Group.
What trends have you seen in the adoption of micro WTI oil futures and options?
Micro contracts in general that really found their footing in the equity space. We've been able to listen to our customers and hear their demand for being able to use those smaller size contracts across all asset classes. We launched our micro WTI contracts a couple of years ago, and that's been a big component of our growth. It's additive to our growth, and we think it's bringing in not just larger retail players, but smaller institutional players as well. So when you think about micros, these are contract sizes that are 100 barrels of oil, not 1,000 barrels of oil. So it's still a decently sized contract, but it's risk appetite that's sized correct for customers that want to gain exposure or want to manage smaller exposures to their crude oil exposure. What we've seen on the back of that since we launched micro WTI, which are doing about 100,000 contracts a day, very additive to the overall pool, is we've actually seen demand now for micro agricultural products. We just launched our micro ag contracts about 2 weeks ago, and they averaged about 80,000 contracts the first week of trading, providing tools for unmet client need in risk appetite and sizes and packages that are appropriate for the risk appetites of individual traders. And it's really large professional retail traders or small institutional traders that's mostly focused on, and we're seeing a large portion of that growth from particularly the European area. So right time, right product, right risk appetite, focused on the right customer base, and that's additive to that healthy ecosystem I've talked about.
Is the growth being driven by new clients or existing clients trading more?
Different client segments, and making sure that we've got the right portfolio of products that are sized appropriately for a risk appetite and need. The micro contract suite is now across all of our asset classes, and as you pointed out, we're seeing triple-digit growth in micros across the entirety of the commodities complex specifically. When we think about what that means and who those customers are, oftentimes we'll see a customer that wants to trade, say, crypto or gold, a retail trader, for example, small institutional, and they'll find that they're coming for one product, but once they find that they're connected, they found a clearing firm, and they've found a broker that can manage their needs, they often then will start to look at multiple products. So we typically will capture a customer because they want to trade, say, crypto or gold or WTI, and then they'll add different products over time. That also works when you have sector rotation. Since we have micros in all of our asset classes, when there are events that might impact a particular product more than another, they're very easily adaptable to saying, well, I can now trade micros in equities or crypto or WTI. So I think for us, we think about making it as easy as possible for customers to manage all of the risks they either have or want to get exposure to in the most seamless way possible that is in liquid, deep electronic markets. And that's what we focus on. It's serving customer need in a time of great uncertainty in a risk-on environment. We want to be that provider of risk-on risk management tools for those customers.
When do the Nano contracts come out?
Funny you mentioned that. We did launch a 1-ounce contract, which is a tenth the size of a micro, which is 1/100th the size of our main gold contract. And it's traded, it's probably averaging 9,000 or 10,000 contracts a day. So we are dabbling with that, and how small is right sized, and I think micros right now feel right. We've had our 1-ounce contract out there for probably a month and a half now, and it's trading but the micros are proving to me, I think, more long-term sustainable. So we'll continue to talk to our customers. We're in the business of responding to customer need. If they need it, we don't have it, we will provide it. That's our goal at CME Group. That's what we do.